This episode of Talk Your Book is proudly brought to you by Honan, providing a complete range of insurance, risk, and financial solutions.
Yeah. Fundies called me up, told me to take a look, but stay stubborn as bulls and talk their own book. Get the money, get the money, get the money.
Well, Gino, Rossi, thanks very much for making your Talk Your Book debut. We'll get into your stock pick in a little while, but I thought maybe you could start with Spheria Asset Management and what your particular focus is there.
Great. Thanks for having me, Chris. I really appreciate it. Well, Spheria Asset Management's been going since 16, so that the principals came from Schroders to Pinnacle and set up Spheria. We specialise in small and micro-cap stocks. Big companies make us yawn. And I joined in 18 to help launch a global micro-cap fund, which really was part of the plan since the formation of the business. And we just saw a great opportunity in global micros to follow the same process which has worked for the boys over the years, but apply it to a bigger universe.
It's an interesting space, global micro cap. There's quite a few micro and small cap ASX listed or AXS funds listed in Australia, but certainly in a global perspective, there's not many companies or funds that focus on that global micro cap space. Why is that, do you think?
Look, it's a good question. I think part of it is, firstly, I'll define global micro. So global micro, we're talking about companies under US 1 billion.
Yeah.
Okay. And so our average holding is about the size of a Domain or a Blackmores, so more a small cap in an Australian context. Why don't more people do it? Look, I think ultimately, your fund is constrained. We could never run Magellan type funds under management in this space, right? And so I think there's bigger fish to fry. I think it's a relatively expensive product to run because we have to do a lot of the research ourselves because a lot of these companies aren't even covered by brokers. And so I think really it's the fact that we're so passionate about global and micro that have led us to do it. But if all we thought about was making money, actually, we'd first do smalls because we can run a much bigger fund there. So really for us, it's, we think it's a good outcome for our clients and we have a lot of fun doing it. But I think the real reason is a bigger fish to fry. I actually wrote about that in my monthly this month. I talk about the investment industrial complex where the whole industry is set up to favour larger stocks because, the investment banks make more money out of them, media makes more money out of them, fund managers make more money out of it. So it's a bit of a conspiracy theory in a way, but I think when you actually look at the data, it's just a fantastic asset class.
It's pretty easy for anyone that's thinking independently to get labelled a conspiracy theorist at the minute. What about, so the pressure for you is really to make your money from the capital appreciation as opposed to the fees. Is that sort of the differentiator?
Yeah, I mean, we do have a performance fee as well. We think global micros can outperform large caps, small caps. Over the long run, they have. Yeah. And our ability to add alpha is much greater.
And do you avoid the trap of trading against algos too when you're in the micro cap space? Is it fair to say that a lot of that algo trading is really dominated by the big cap stocks? And as a human being, it's just very hard to get an edge over, algorithmic trading.
There's much less of that. And also, of course, passive money. Yeah. I mean, passive is just a huge influence now, as you know, in large caps. 50% of the US market is passive. Whereas if you look at our portfolio, not even a quarter would have Vanguard or BlackRock in the top 10. Whereas if you look at the S&P, 99.9% of stocks have Vanguard, BlackRock, State Street as like top 5 shareholders. So I think that's another exciting thing. And the thing also is that it's not as US centric. Like in large caps, the US is everything. And everyone's in these US big tech stocks, whereas our fund is 20% in the US. And the index in micro is only 26%. You've got big micro cap markets in Japan, Canada, UK, Australia. Yeah. It's very different.
And what stock did you want to do a deep dive on today for us?
Well, we're spit sport for choice. We have about 14,000 stocks in our universe, but one of our favourites is Vitoquinol, which is a French company. I won't try and use the French pronunciation, but you might.
Vitoquinol is how I pronounce it, Gino.
Well, look at that! Look at that picture in the background.
And talk me through what do they do for the viewers that haven't heard of them before.
So Vitoquinol are an animal pharmaceutical business. They are relatively small in the scheme of the industry, but animal pharmaceuticals, I don't know there's any exposure in Australia. I don't think there is.
Plenty of veterinary clinics that have rolled up, but I don't know if there's actual pharmaceutical products for animals that's listed.
No, not that I know of. I'm sure there's something out there.
And
some mining stock turned animal pharmaceutical.
What geographies do they operate in?
So they're global. They have a bit of a skew to Europe, but they've been growing very fast in the US. And what's lovely about animal pharmaceuticals, and it's a shame really we don't have exposure in Australia, is that, it is a business, well, it's got some really nice things over human health, right? Firstly, the government's not paying you, right? So it's self-pay, which means they have that big reg risk. The patent cliffs just aren't as extreme. So when something comes off patent, you don't get those big price drops. Generic competition isn't as big an issue. And in fact, Zoetis, the market leader, says that, of its top 24 products, on average, they have a 30-year life.
Yeah.
Right. So on average, they've been around 30 years. You just don't get that in human health. Right. The minute it comes off patent, it gets destroyed by generics. And the really nice thing we like about this industry is it's consolidated really, really heavily over the last decade. And, for Australian listeners, think about CSL, right? When they bought ZLB Bearing. And over the years, that whole plasma industry is consolidated down to a very cozy oligopoly, so cozy that they share data amongst themselves about how much they're producing. And you look at what's happened to that industry and the returns and how well CSL's done. And we see the same dynamic playing out here, where the top four now control nearly 60% of the market.
And it's not just pets, it's pets and farm animals as well.
Exactly, yeah. It's pets and livestock. Now, that's another interesting thing about Vitoquinol is they're about 60% pets, which they call companion animals.
Yeah.
The market leader, Zoetis, used to be 60% livestock. But over the last about 5 years, they've really gone heavily into pets. And so now they've flipped that. So they're also 60% companion. And it tells you something, right? When the market leader is going heavily from livestock to pets, it tells you where they think the better market is. Well, Vitoquinol is already there, with the right mix. Elanco, who's another big player, come out of Eli Lilly. All these guys have come out of human health. Yeah. So Zoetis used to be part of Pfizer. Elanco used to be part of Eli Lilly. They're closer to about 50%, 50-50.
And they're having a look at their registry. There's heavily family ownership.
Yes.
For Vitoquinol.
Yes.
What percentage is family owned? And maybe talk us through why, or if you feel that family owned businesses often make better long-term capital decisions.
Yeah, I mean, they're about 2/3 owned by the family. The founder's name is Etienne Frechen. His son now runs the business. So this hegemony is something people generally don't like about it. We actually don't think it's an issue. We'll judge that person on their abilities, whether they're the founder's son or not. We don't really care. And yes, family-run businesses have been shown to, as a generalization, produce better returns. Where they're very strong is also on ESG. So they tend to look after their workers better. They tend to care about the environment more, which is something Vitoquinol are okay at, but are improving on. And we just think that gives you an enormous ability to take a long-term view, right? They don't have to look over their shoulder, worry about being taken over. And so they can take those harder decisions, those longer-term decisions. You need to be careful that they don't have interests elsewhere and you're not just part of a cog in a bigger picture. Mm-hmm. But in this case, their whole family wealth is tied up in this business. So it means close alignment. And a long-term view. So we quite like family-run business as a generalization.
And they've got a growing exposure to China.
Mm-hmm.
Chinese government's having a huge impact on various different businesses at the minute, particularly in the education and the tech space. Intuitively, I would feel this would be a sector that the government would be quite supportive of in China. Is that your read on it, and how are you interpreting some of the regulatory impacts that the Chinese government had on different businesses and how it could impact vetoquinol?
Yeah, I mean, so again, they don't really call out China as much, but again, the market leader Zoetis has called out really, really strong growth in Brazil and China from this livestock business. As you know, demand for animal proteins is growing quickly in China, and so they're getting immense growth out of these areas. So yeah, I think they are supportive because they see the need for that nutritional benefit.
And it's not in the government's interest over there to do anything that's going to increase food prices, is it?
No, I exactly. So I think that is not a risk as far as I see it. If anything, an opportunity.
And talk to me about, they acquired the rights to Drontal and Profender in 2020. What impact, or what type of an acquisition was that, and what did those numbers look like for the business?
Well, as a really spectacular acquisition, and back to my earlier point, Elanco tied up with Bayer's animal health business. And again, this industry is so concentrated that the regulators forced them to divest some assets. So, that's a great sign. Obviously, they didn't want that going to their biggest competitors like Zoetis, so vetoquinol was the better, lesser of two evils, I guess. These are both drugs are for heartworm, tickworm, hookworm, all the worms. An area where they didn't have that much exposure, but it's a big part of the market and a high growth part of the market. It seems to be growing about 8%. The interesting thing about this is they got the products and they got nothing else with it. So they got no people, no manufacturing facilities, nothing. So in the short term, actually, you need to be careful because their earnings are actually slightly inflated because they've got all this revenue that's come rolling in. Now they're going to have to add the salespeople and the infrastructure to support it. So in the near term, you actually could see margins wane a bit. But then longer term, you've got great opportunities from revenue synergies, so being able to cross-sell your products, which should be substantial here. And secondly, Eli Lilly or Bayer are still manufacturing for them for 4 years. And then when that rolls off, they'll bring it internal and you should get a nice kick to gross margin out of that. So it's going to be a funny profile where you've had this massive lift, perhaps some give back, and then, we think a very good outlook.
And talk me through some of the numbers. What's their market cap? Perhaps what's their revenue and what are their earnings? So
by the end of the year, they should be running at about 500 million euros. From memory, Zoetis is up around 6-7 billion. So you can see they're quite small in the scheme. What's interesting is their margin. So their gross margin is 70%, which is best of breed. But their EBIT margin is down around 13-15%. Meanwhile, Zoetis EBIT margin is 35%. Well, what's the difference? Scale. And the fact Zoetis have a direct presence in, I think, 45 countries, whereas vetoquinol only have a direct presence in 24. So as they grow and they go into more countries direct and capture that wholesale margin or that distributor margin, we see margins ratcheting up over time, and that's really a big opportunity for vetoquinol. Because there's no other reason other than the fact that Zoetis maybe have some more biologics or sort of higher IP products. There's no other reason why there should be that massive disparity in margin. And Profender and Drontal adds about 50 million euros, so they're quite sizable in terms of the business. A big acquisition. Balance sheet still net cash, unbelievably. Okay. So and I think there's room to buy more. There's quite a few private companies out there. Actually, Zoetis just bought an Australian company with 200 mil of revenue, private Australian company.
And so taking the helicopter view of the industry as a whole, what are some of the potential tailwinds? I sort of think of lowering fertility rates being a potential tailwind. Loneliness and mental health appear to be exploding around the world. And even that digital world is such a, can be such a nasty place these days. Are they some of the tailwinds that are creating greater demand for people to have, pets and spend more on their pets over the longer term?
Absolutely. I mean, it's it's funny when I think of how I treated my dog growing up. It was outside. We didn't even buy pet food. We gave it table scraps. Whereas now, people will just spend anything on their dogs. They call it humanization. They really will spend anything. Animals are living longer, and we know, as with people, most of the healthcare spend is in the elderly years. And then COVID. I mean, every single one of my friends now has a dog.
Yeah,
it's anecdotal. And I haven't actually found any concrete evidence, but I fully expect to see a massive increase in pet rates because of COVID.
Is there going to be a mass reduction once COVID's eventually gone, where people are like, "What the bloody hell are we going to do with this pet? We want to travel again." Do you think? Or
it's true, there might be a bit of that, but I think once you experience a pet, once you grow up with a pet, it's something I think that sticks with you. They give so much to the family, and like to your point, in terms about mental health and smaller families sizes, then it all goes towards pets. I think that's a big tailwind. I mean, I saw something that says the rate of pet adoption in the US has gone up a lot. So people are looking to adopt pets from shelters, which is great. But I fully expect to see a big tick up. And we don't factor that into our modelling, but anecdotally, I don't see how COVID's not a massive tailwind for pet adoption.
And what sort of growth numbers have you come up with for the next 1 to 2 years?
Well, once this acquisition levels out, the companion business or the market grows at about 6%, 5-6%. With COVID, it may get a kick up, as we've just discussed. And then livestock similarly grows at about 6%. So that's sort of 1 to 2% growth in animals, and then another 2-3% growth in the size of those animals. Gives you about 5-6% growth. So that's a good market growth rate. We think there's some market share gains Vitoquinol can take, but we're very reticent to factor that into our modelling. So for us, it's kind of that mid to high single digit revenue, and then that operating leverage over time as they grow scale, go into new countries. So you should be able to get sort of double-digit earnings growth over the long run.
Beautiful. Well, you paint a very pretty picture. If it's half as good as CSL, you'll have a lot of happy viewers.
and it's on 16 times EV/EBIT.
Yeah.
I mean, which is not expensive. I mean, our microcap market's on 17 times, S&P's 25 times.
Yeah.
Nasdaq's 30 times. And Zoetis is on 34 times. And this is on 16 times. So it's like, well, and honestly, I think it's covered by 3 French brokers. It's not covered by JP Morgan, Bank of America, anyone like that.
Yeah.
It's just not that well known.
Yeah.
We bought it when it was about US 800 mil. Now it's about 1.6, 1.7 bill. So, I might start to get a bit more interest in it.
Beautiful. Thanks very much, mate. Really appreciate you coming on the show.
Melbourne Bulldogs?
Melbourne, but it's a toss the coin. Yeah, I wanted to sit on the fence, but I'll say Melbourne.
All right. Well, this is recorded now.
Yeah, I can edit this out. You get control on the edit button.
Record 2 versions.
Thanks, mate. Catch you soon.
Thanks, Chris. Appreciate it.
This episode of Talk Your Book was proudly brought to you by Honan, who go beyond a transactional insurance broker to deliver better outcomes for their clients. If you're enjoying Talk Your Book, make sure you subscribe to Chris Judd Invest.